Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the S&P 500 ETF, ticker symbol SPY. I'm starting off with this one first because last week I put out some forecast lines that were a 2-week forecast. And if you recall from last week, I drew this line up with a pivot point to be forming right here, which it did. Shortly after that showed a hanging man and then a shooting star back to back. So what we're expecting here is a possible retest of this former resistance now turned to support. Remember, the role reversal occurs when you have a former resistance that's broken, it turns to support, and most of the time after the breakout here, we generally get a pullback to that support level, and then we'll have to see whether or not it bounces. So right now I'm keeping that forecast in place. We'll have to see what happens next week. Of course, we have the Thanksgiving week shortening the trading sessions, but that shouldn't make a difference with a thinly traded market. There's more traders that would be more apt to push stocks around on the lighter volume. Of course, you need a lot of money to do that, but it does happen. And so that is the spiders. Again, I'm keeping my target right there at 455.55. Now, with that, I'm going to hop right to the VIX. It's the volatility index. Last week, again, my forecast lines were right there. I said we would most likely go down, test support. Support was tested. We just didn't get all the way down to support. And remember, I said the test of support would most likely result in a target price of 1790, which has already been hit. Now, the fact that we have a long shadow on top of that candle right there tells us that we might see a little bit of a pullback on the VIX, but ultimately, I think we're going to move higher. Remember, this open gap is still in place. I've given a guarantee that that will one day fill. However, I haven't put a date on that, of course, because you never know when it's going to fill. But history says 100% of the gaps on the VIX have filled. Therefore, I am stating that it will fill. Here's the forecast. Early on next week, a retest of that moving average and right back up to test this resistance right here, which would leave us with a VIX price target of 1977. So again, that is for the VIX. Now hopping right to IWM. This was one that worked out very nicely with our forecasts. Again, these with the lines here, it's hard to see because it's buried within the price action. But last week, I put a price target on IWM at 235.82. It hit that on Wednesday, actually. We continued lower, but notice where this brings us. Very interestingly enough, I've been talking about the role reversal, and this is when former resistance here and here, once broken here, turns into support here. So there's still some downside increase in volume here, which leads me to believe that IWM will most likely drop just a little bit more. And then I think we could see a little bit of a bounce there off of that. But the moving average up here is going to act as resistance because that too acts as a role reversal. Right? Once the prices are dropping below the moving average again, which acted as support, will then turn into resistance. Go back a couple of weeks and you'll see the presentation that I gave on the weekly market report showing you the textbook examples on how that works. And again, we're just following the technical signals, not going too far out in our forecast. These are very short-term forecasts, mainly for option traders and short-term swing traders. But if you're a long-term investor, you can take these same concepts and apply them to a weekly chart or maybe even a monthly chart. So that could help you out there. All right, let's go to diamonds, DIA. The forecast again was that we would move up early in the week and then pivot lower. Again, that's exactly what's happened. Monday and Tuesday, we went up, showed a shooting star right there, and then we started to come down with the end of the target line right there being at 358.01. That hit yesterday. But the volume is still increasing. Now, this brings us to another area. Once this support level is broken on higher volume, see how the volume is going up, we would have to remove that support line now, unless you're getting stopped out, you would get stopped out, and redraw at a lower support level, which would be these highs here. You see? So we'll have to see. The first support level was drawn from this high. We've lowered it. This is now acting as a role reversal support. Not quite sure we're going to hold that because the volume, again, is increasing on the way down. We have a gap all the way down here, and it could be interesting to see whether or not that gap fills next week. I don't think we're going to go that far down, but I am going to extend this line from last week, and I'm going to say that I do believe we're going to retest that support, but maybe even violate it just a bit. All right, so let me draw my drawing tool here. I'm going to extend that out, and I think we could go just a little bit lower next week and see if there's a violation of that support level. So downside price target next week on the diamonds is 354.14. Again, diamonds is the Dow Jones Industrial Average ETF. Now, if I hop over to the Qs, this is one where I said we would most likely rally early on in the week and then pivot lower. Monday, Tuesday, and Wednesday, we rallied. We broke out of this high. Now, this is where it gets interesting because remember, this was a role reversal support level. I could erase that now and move that up. Right? Now, watch what I'm doing here. I'm still keeping that downside price target in there, but I'm also saying that there's a chance that we could break out, which we have, pull back to this role reversal and then bounce. Again, still too early to tell on whether or not that's going to happen on a holiday week. But again, this resistance was broken. Officially, we came out on slightly higher volume. So what the forecast is going to look like, again, for next week, I'm just going to be very conservative and say I believe we're going to pull back to this breakout point, fill that slight gap, and then we'll have to see whether or not it bounces from there. Remember, it's a shortened trading week. So my downside price target on the Qs is going to be 401. Very unusual that that target falls exactly on a dollar amount, not on the penny. But we have, again, a high probability that we could see that pullback with the general markets looking more bearish than bullish for the short term. Last week, I also went back to forecasting ETHE, which is the Ethereum ETH. This forecast is pretty simple. Remember, last week we had this small candle. I forecasted lower with a price target down there at 40.48. We hit that on Tuesday. Wednesday and Thursday here we formed hammer patterns, and then we had a little bit of a bounce. Notice down below that we have a CCI that is crossing with a buy signal. So this is going to be the most bullish out of all that I've mentioned so far because, again, this support level is holding. It's proven to do that with this hammer pattern yesterday. And then as the volume starts to increase on the way up, we could see a possibility of a gap fill right here. So I'm going to draw a horizontal line to that gap fill target, forecast Ethereum to the upside next week with a price target of 43.87. Now, also keep in mind that as we come into December, there's a misconception out there, a lot of misinformation with regard to the year-end rally, aka the Santa Claus rally. The actual Santa Claus rally and year-end rally is only for the last 5 trading days in December and the first 2 trading days in January. And according to the Trader's Almanac, 80% of the time during that period, that 7-day trading window, we average 1.4% rise in prices in that 7-day trading window. Now, last year we had 1.6%. And we'll have to see whether or not that happens. But don't get caught up in, oh, this is the January rally or this is the year-end rally or the Santa Claus rally. It's only a 7-day window. So what I'm telling folks is if you're going to go long, remember, it's all about risk management. So if you're in a stock like Ethereum perhaps, and this breaks out of a high resistance area, protect yourself if it does not bounce. So in other words, if this is a support level that fails to hold support, and do this, guess what happens? Resistance now is going to act as a ceiling. So you have to protect yourself when the prices fail to rally. So again, it's just me pounding the table on risk management like I usually do. And with that, I'm going to end this week wishing you all a very happy Thanksgiving. Please spend good quality time with your family and friends. Be thankful what you've been given this year. And I look forward to speaking with you next week. So long.